Hello, good morning, students. Today we discuss the next adjustment, okay, and that is interest on capital. Now, see here, interest on capital is the expense for the firm and income for the partner. That we know, okay. So, interest on capital is record on profit and loss appropriation account debit side because it is an expense for the firm. That's why it is record on profit and loss appropriation account debit side. Next effect you have to given in partners capital slash current account because it is income for the partners, that's why. Okay. So income of partners is always record on partners current slash capital account credit side. So next one is now interest on drawing. It is opposite of that. Interest on drawing is the income for the firm and expense for the partner. So that's why it is record on profit and loss appropriation account credit side because it is income for the firm. That's why. And second effect, that is the expense for the partner. That's why it is record on partner's current slash capital account debit side because it's the expense for the partners. That's why. Okay. So interest on capital and interest on drawing both are opposite. Okay. After that, we discuss salary to the partner. After that, we discuss the salary to the partners. Now, see here. Salary is also expense for the firm. Salary is also expense for the firm. So that's why it is record on profit and loss appropriation account debit side. Okay. And it's the income for the partner. That's why it is record on partners capital slash current account credit side. So salary to the partners is the expense for the firm, income for the partner. That's why it is record on PL Appro and partners capital slash current account. After that, we discuss next adjustment and that is interest on current account. Now see here, all of you know that in bank generally there are three accounts. First one is saving, second one is current account, and third one is fixed deposit. We are talking about here current account, not saving account, not fixed deposit. Okay. So in current account, the balance may be positive or may be negative. Balance may be positive or negative. So that's why interest on current account also income and expense for the partner. If the plus balance is there, then income for the partner. And minus balance is there, then it will be the expense for the partner. So there is a two-way. Okay. So cash balance, there is no option. It is always plus. Okay. But in bank balance, it may be positive or it may be negative. Okay. In current account, your balance may be positive or may be negative. Depends on transaction. So if there is a plus balance, then it is income for the partner, that is interest on current account. Okay. If there is a plus balance, then interest on current account is income for the partner and expense for the firm. And on opposite side, if there is a minus balance, then it is a expense for the partner and income for the firm. Okay. So here, interest on it is given in question. Okay, debit balance or credit balance. It is always given in your question. The balance is plus balance or minus balance. If there is a plus balance, they record CR. If there is a minus balance, they record DR. So, in this case, if CR is given, then it is the income for the partner. Interest on current account, income for the partner. So, interest on current account CR balance given. So, it is record on partner's current account credit side. Okay. And second effect, profit and loss appropriation account debit side. Next one is now, suppose if it is minus balance, then it is an expense for the firm. That's why it is record on current account debit side, interest on current account of debit balance. Okay. And next effect, profit and loss appropriation account credit side. Okay. So these are the effect of interest on current account of partners. Uh, Next one, we discuss transfer to general reserve. Next adjustment is transfer to general reserve. Now see here, if any amount is transferred to general reserve, it must record it on profit and loss appropriation account debit side, and second effect, reserve is recorded on balance sheet debit side. Okay. All the reserve, all the reserve are recorded on balance sheet debit side. So that's why it is added to the balance sheet. It is added to the balance sheet. Okay. Sorry. It is added to the balance sheet liability side, add to reserve. Okay. General reserve is add to reserve. Okay. Balance sheet liability side. Okay. So I repeat now. First effect, it is record on profit and loss appropriation account debit side, and second effect, balance sheet liability side. Reserve and surplus is given. Okay. In that case, you have to add here general reserve. If general reserve is not given and recorded directly in outer column, but if reserve is given, general reserve is given, then add to general reserve, and after totaling both the amount, you record on outer column. So thanks all of you. So we'll discuss now next adjustment in next lecture. Okay, see you. Bye.